From Daily Forex, this is Chris taking a look at the crude oil and Canadian dollar markets. As you can see, the West Texas Intermediate crude oil market has gapped a little bit higher during the trading session on Friday to slam into the $80 level. We did on Thursday pull back to 75, which was the previous high, found market memory and rallied. So I think every time we pull back now, you have to think it's only a matter of time before we go long. A daily close above 80 also opens up a move towards 82.5. The US dollar has been crushed by the Canadian dollar. And it's not just oil. The jobs figures came out with the Canadians adding triple what was expected and the Americans missing, coming out with 194 instead of 500,000. So this all kind of ties together nicely, especially with the crude oil markets rallying. So there's really no reason to short the Canadian dollar or go long. And we have broken through this trend line. So I think the attempt to recover that really looked good until the last couple days, I think it's done. So now at this point, you could draw, I suppose, a little bit of a support line here. I think what we're more likely than not going to see is if we can break 124, we'll probably go to 120. We almost formed a golden cross, failed that as well. I'm looking at this now, not less through the prism of trying to short it, more or less as a relative strength indicator for the Canadian dollar against other currencies, because the dollar is holding its own everywhere else. So if you can marry up the Canadian dollar with a very weak currency, off the top of my head, and I haven't even looked at the chart, but something like the Euro CAD, that makes more sense. You can see if the Canadian dollar is strengthening, Euro looks relatively flat, you short Euro CAD. If we turn around and take out 126.5, then okay, maybe we rally again, but right now it certainly doesn't look good.